Greetings, members one and all of the Salivation Nation. What a mess we have in silver. This is something that comes to us from Seeking Alpha. We're going to take a look at this from a slightly different angle. We're actually looking at paper silver or electronic silver and electronic gold, the ETFs, SLV and GLD. And I think this is an interesting way to kind of approach this, because if there's going to be any manipulation, it's going to be within those agents, probably the biggest agents with the GLD and SLV. And so let's take a look at why it's a mess according to this article here, and keep in mind that there's really no way, in my opinion, to really test GLD or SLV to see if it backs up to the physical. It's based off of the physical, but it's not really backed by the physical. And I think that's important to keep in mind. And hence why I can almost guarantee that there's a lot more of these ETFs representing silver and gold out there than there is the metal to back it up, because it's not backing it up. It's only representing it. People cash them out. People cash out the SLV and GLD for dollars, fiat currency. Never do they cash it out for the actual metal itself. So, while gold has enjoyed a nice run since the fall of 2018, silver has struggled to make any headway. Normally, what's good for gold is good for silver, as these two precious metals typically rise and fall in tandem. Silver, though, is like gold on steroids. When a bull market in precious metals is taking place, silver usually far outpaces the gains in physical gold, given that silver is a much smaller market and a more volatile metal. Although, I don't know, is it a smaller market? That's interesting. Just a slight increase to buy volume can have a major impact on price. It's not uncommon for silver to outperform gold by 2 to 1. And that's certainly not occurring now. In fact, silver has been underperforming gold by a hefty margin over the past 6 to 7 months. As we compare the gains in the iShares Silver Trust, SLV, to the SPDR Gold Trust, GLD, over that time period, there's a noticeable lag in SLV. In this article, the author discusses why SLV is underperforming, how it's impacting the silver stocks, and why there is hope for a silver bull market. So why is it underperforming the ETF SLV? It hit a bear market at a low around $13 in December 2015. It took almost 5 years to reach that bottom after having peaked at $50 in the spring of 2011. From those lows, SLV proceeded to increase 50% to $19.50 in a span of just 6 months. Since then, though, SLV has been a real mess. Not only did it give back all those gains and retest the lows last fall, but over the last month, it's been struggling to even stay above its 200-day moving average. Compare that to GLD, which was near its 2016 peak up until a few weeks ago. For the last several months, SLV has been closer to its bear market lows than its 2016 highs. That's how bad it's been lately. There is zero momentum right now in SLV, as a breakout has been lacking. Here we can kind of see this chart here. Technical-oriented traders looking to take major long positions won't jump into the silver market until the chart improves. Traders, algos, etc., searching for momentum aren't finding it yet in the physical silver market. There's simply no reason for them to invest on the long side until the technical picture is brighter. So the supply-demand fundamentals remain neutral. And really, that's what it boils down to, because silver, as I've mentioned before, is a duality metal. It is seen as a metal that has just as much, if not more, industrial use and value than it does as money and as a preserver of wealth. It's always supply and demand that ultimately determines the direction of any investment or asset class. When it comes to silver, its supply and demand outlook is fairly neutral at the moment. Worldwide silver mine production has increased since 2008, but scrap supply has dwindled, which has led to an overall supply that has steadily declined since the peak of 2011. Mine production actually hit a top back in 2015, and while 2018 figures are still being compiled, it's projected that supply was flat year over year. And here we can see that with mine production here actually increasing from 2015 here and kind of heading back down. Some people call that we've passed peak production of silver. And that's possibly could be the case, but we can see scrap has decreased too. Net hedging supply, there's really hardly any. It's here towards the bottom here, 2017. And net government sales are, minimal there to none. Hardly, we can't even see it on the chart there. Given the slight drop in supply over the last several years, one would think that would result in an upswing in the price of silver. However, demand has been declining as well during that time. Silver is both an industrial and precious metal. About 55 to 60% of its annual demand over the last 5 years has come from industrial fabrication. And that's basically what I had talked about before. Demand for silver for these applications has remained basically flat during this time. The same goes for jewelry and silverware, which account for roughly 25% of silver's overall demand. The rest of the demand comes from the investment side via coins, bars, and metals. It's the investment side that is a real driver of the silver price, as its demand can fluctuate by extreme degrees and greatly influences whether there is a deficit or surplus in the silver market. But you know what? I don't know if I really agree with that, because given that it's there's silver everywhere. Everywhere, anybody that wants to buy it can get it. And if we double our purchases, every one of us in this community, and even overall, I don't think it's really going to have that much of an effect, considering how much it's used on the industrial side, picking up well over half the demand there. I don't know that it would have that much effect, really, to be honest with you. Demand for silver coins and bars must be looked at not just in terms of millions of ounces, but also in total dollar value, given the significant decline of the price since 2011. In 2018, both the total ounce demand, 124.8 million, and dollar value, $1.96 billion, was the lowest since the 2009 financial crisis. And here we can see the dollar value and the coin and bar demand, millions of ounces there. So yeah, very intriguing, interesting. And you can see that dollar value has gone down in the ounces there. But again, this is really, if you think about it, this is a 10-year period, which is a short amount of time in the grand scheme. Silver is a long-term game, and that length may surpass 10 years, just depending on where you're at in accumulation. Overall, silver demand for 2018 is projected to be a bit less than supply. And I've heard actually the opposite as well, that it's just a bit more than supply, and that it's not enough to really have an effect on price. It's mostly because of continued fall in investment demand, which means there will be a slight surplus for 2018, as not all the silver produced is expected to be absorbed in the market. And that could be true. I mean, there's less, but I think that even if it were to pick up, how much could it pick up in order to really affect that market? It had to be really a whole lot, like I said, probably more than double is my guess. But that may be quite a stretch to make that claim. But, there's so much out there, and it's readily available. Now, I'll say that, notwithstanding that some people have talked about in their local coin shops, in California especially, they say that it's hard to find silver at local coin shops there. So I think it just depends on where you're at. Around here, in my neck of the woods, there's a lot. There's a lot of silver. And online, you can see it everywhere. And you can get it for spot price. The impact this is having on the silver miners. Well, HUI is a group of gold stocks that is used to track the performance of the gold mining sector. Global X Silver Miners, SIL, is an ETF that contains a basket of many of the most popular silver producers. Since the September 2018 lows in the mining sector, the HUI is outperforming SIL by almost 2 to 1. There you can see. Very interesting. Gold and silver. Some of the stalwarts in the silver mining space, like Pan American Silver, Hecla mining and Coir mining have seen single or double-digit % losses since the fall of 2018. Meanwhile, many gold stocks have been generating absolutely stellar returns. Now, keep in mind, silver is a byproduct of mining mostly. But yeah, you can see the the performance of these other miners. All of this blame can't just be on the price of silver, as a slew of silver miners are experiencing operational and financial issues as well. It's been difficult to find a quality silver producer that is meeting or exceeding targets at the moment. A few also have overextended balance sheets, which isn't helping matters. If silver was outperforming like it typically does during a gold bull market, then these producers would be able to overcome some of their operational and or financial issues. But margins are so thin right now for most silver miners that the group as a whole is struggling to generate decent cash flow. Very interesting. There are many gold companies that have AISC in the $800,000 per ounce. That's all in sustaining cost per range. At $1,300 golds, margins are quite healthy. Compare that to the silver miners, which have all in sustaining costs of $13 to $15 per ounce, yet silver is struggling to stay above $15. Now, that is another area where I disagree. I've heard numbers anywhere from $5 to $12, $13, not $13 to $15. So I don't know that it depends on where those numbers come from. The depressed silver price, accompanied by the issues that many silver producers are facing, means there's no rush to go out and buy a bunch of silver miners. In fact, the author's top list of top 10 gold and silver mining stocks consists of only of gold miners. It's been that way for the last 4 to 5 months, as not a single silver miner has cracked my top 10 since last November, even the months before that. And I think that's probably because they're competing with the gold mines and copper mines, by the way, and nickel mines, because they produce silver as a byproduct. And that's something that is unique because the pure silver miners, they're also competing with gold mines, copper mines, and nickel mines, and other mines. When the bull market in gold was in full swing, silver generated even stronger returns and eventually was sporting a 1,000% gain by 2011, more than double that of gold. What's currently taking place in the silver market isn't out of the ordinary. A rise in gold price will eventually pull silver out of its listlessness, just like it did back in the early 2000s. Gold might need to break out first, but that surging investment demand on the gold side will spill over into the silver market. A $5 billion increase in silver investment demand would create a 150 million ounce deficit in the silver market. At that point, the supply-demand fundamentals would be extraordinarily bullish. It also shows that it doesn't take much to flip this around. $5 billion is a drop in the bucket for the gold market. The gold to silver ratio is at a 25-year high and close to all-time highs, which means that the silver market is likely close to a turning point, assuming gold maintains its upward momentum. So far, it's kind of been down lately. For now, the author is going to keep his focus on the gold miners, but if gold moves even higher, then soon it will be time to plow into physical silver and some of these beaten down silver stocks. He's just waiting for key breakout levels at this in both silver and gold. So it's going to be interesting to see how this plays out. And I do agree, silver is a bargain now. And how long will it go on this trajectory and stay low? I think that does depend in part by gold, but also in demand. And I think partially the demand, if the author's saying that investor demand is driving the price, well, what happens if the economy struggles like it is in China right now, where there's a lot of industrial demand, and that's going to bring more silver supply in, and it may not be matched by increased investor demand. And I think the only reason why quote investor, by the way, I hate to use that term when it comes to precious metals, but for the sake of this article, I'll use it. If investment demand increases in the rounds, coins, and bars arena, and it decreases for industry, then how much are you going to have to buy in order to make that level out? For the price to move. And my feeling is that it won't pick up until the price goes up. You know, as I've always said, people tend to buy high and sell low. And that's the case with silver too. People aren't excited about silver. People aren't excited about anything where there's a flat market or when the market's low. And right now we're seeing silver really suffering. It really is in a mess. How long will it take it to get out of this mess? I don't know. For you and I, for those of you who've been sticking with me on this channel, and for those in the community, in the what's known as the silver community here, we understand no matter how low silver goes, we're buying. In fact, I just bought an ounce today. But you know, it's one of those things where you hold on to it for the long term. The length of time depends on the person, depends on how close they are to retirement or what have you. I'm a collector, so I buy pieces that I enjoy, which means that I'm probably going to be paying a bit over spot for silver, but nonetheless, I'm protected by the intrinsic value therein, and I do believe it's a bargain. Many of us in the community believe that anything under $20 is a bargain, so we're going to hold on to it and realize that it's going to protect us in the long run. But gold is another way to diversify your investments as well, because gold has held the ultimate, it is the safest of the safe havens, and it's not nearly as volatile as gold, and typically it maintains its value longer, and during no matter what kind of times come up. The gold to silver ratio is very wide right now, but it will narrow once there is a big spike in the movement of gold prices. I think silver will make its comeback during that time, but you know, it's a risky venture to try to time those things with silver, and that's one reason why I am accumulating more gold now, trying to accumulate more gold as the ultimate safe haven for the storage of space, you know. And but you know, you get pieces that you enjoy every once in a while too. Post your thoughts below. Fascinating, interesting information indeed. Would like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.